Good morning and welcome to joining Cooper Parry for another webinar, which is a WOW webinar, and it is getting ready for audit. This is also in conjunction with the Institute of School Business Leaders, ISBL, as part of their Expert Talks series. And what we'd like to try and do today is have three main objectives, which is to cut through the jargon of what's been released over the last couple of weeks with the accounts direction and the Academy's financial handbook, to reassure everyone that's on the call, both the sort of clients and sort of other members of ISBL who will have their own auditors, that actually the audit show can go on, and it will be more than possible in the first term to ensure that we meet that December deadline, and also to give you the opportunity to ask lots of questions around those updates, and also around the audit process that we can answer sort of throughout. So please use the chat function that you have. Any questions throughout the whole sort of hour and a half will be welcome. And also, if you want to join the webinar in person, we have the opportunity to allow that. So if at the end of the question you put us happy to ask live, you will be brought onto the screen and we can see your wonderful faces, and we won't feel so alone sat in our dining rooms talking to a screen. So that will be absolutely fantastic if you can do that. So just as an introduction to myself, my name is James. I'm one of the senior managers in the not-for-profit team at Cooper Parry, and I work solely in the academy sector. It is a true passion of mine that I enjoy working with those people that are looking after sort of the futures of our kids growing up. And as I have not got the patience to be a teacher, this is really the only alternative that I have to work with all you wonderful people. The webinar that we're putting together today, it's all come about that in sort of yesteryears we would have had a seminar for half a morning. We'd have had bacon butties on the go, cups of tea, cups of coffee, and it had given everybody a great chance to sort of network, a bit of a legislative update, a bit about our audit process, and away you go. But unfortunately, we live in very different times. So hopefully you still feel that it's a nice and friendly atmosphere. There will hopefully be a few smiles, but also feel really informed, and it would be great to just have everyone sort of take part as much as possible. The academy sees the academy sector now, as we know, sort of getting into sort of 10 years old, and as it matures, I think we're starting to really see sort of the broad expansion of sort of those standalone academies that are still sort of ticking along really successfully by themselves, and those now that are going into sort of 25, 35, 40 sort of mats and kind of everything in between. And because our sort of client base really sort of ranges across that entire sort of spectrum, it was quite difficult in terms of where to pin this webinar to ensure that everyone feels really sort of informed and up to date. So our bright idea has been very much to take this as sort of the live opportunity to give sort of the umbrella information, but then we are going to put a series of videos over the summer that really sort of bite-sized videos that can sort of dive into some of these pertinent questions that you may ask today, or may come through future bulletin updates from the ESFA, and that then everyone has sort of that pick and mix suite available to just sort of dive in, have a 10-minute video, relook at the webinar if needed, and get to the place where you feel really supported in readiness for the first term. And this will also be available on the ISBL website as well. So in terms then of today, I'm going to pass on to sort of the first panelist, which unfortunately, due to unforeseen circumstances overnight, will not be Andy Jones. So we just pass our thoughts on there. But we found a willing replacement, and he needs no introduction, and I will let him explain how he's come to be with us today. So over to Nick Simpkins.
Good morning, everybody. I'm Nick Simpkins, and I'm the new head of not-for-profit for Cooper Parry. So it's great to be here. It's taken me a few months to arrive. I've been resting up for a few months, but it's a delight to join such a fantastic team at Cooper Parry. These guys and girls certainly know their stuff and are very passionate about what they do. I've been joined at Cooper Parry.
Nick, I'm sorry to spoil your flow, but you need to put your camera on. We want to see your face. There he is.
There you go.
I've ruined your flow as well now. You were just about to tell everybody how great Cooper Parry is.
Unfortunately, you've got to see my beautiful face now. So, so I've been joined at Cooper Parry by a couple of gentlemen who worked with me for a number of years, Glenn Bott and Bhav Patel, and they bring to Cooper Parry their great experience of working with academy clients and their experience, and also their sense of humour, which hopefully you'll see a little bit later on today. And they will be appearing if they've finally got themselves out of bed this morning. Obviously, the delights of working from home is no commuting. Hopefully, they're fully dressed and raring to go. So, for those who don't know me or haven't seen me before, you can see me now. I've been working with academy clients now for about 10 years since they were first set up. And it's always delightful to work with a set of professionals in such a dedicated sector. These have been tough times in recent years for academy schools, but nothing like 2020 that's come about with the COVID outbreak. I think we've seen unprecedented pressures put on academy trusts up and down the country. Trustees, SLTs, teachers, support staff, you've all had to cope with significant change and uncertainty in the school environment. And I'm sure things will continue to be a challenge for some time to come. So you certainly have our support and our sympathy in terms of the things you've had to go through, and we'll be here to help you through a certainly very busy period when the autumn comes in terms of having to carry out your audits. So that's a little bit about me and how we're going to do it. This is quite a complicated section, so we're going to run through it at a fairly slow pace. You don't need to write many notes down. A lot of the information which we're going to give you this morning is already been published on our website and our updates. So again, if you want to refer to those, and again, we can tell you at the end where to find this information more. But hopefully, if you want to chip in with questions, please do so. It'll be happy to answer the questions if we can. Okay, James, let's get cracking.
Fantastic. Thank you very much, Nick. So I think to start off then with the accounts direction, I think in terms of sort of a broad umbrella, what's kind of the key thing to be bringing to people's attention this year?
Okay, so the accounts direction 2020 is obviously the key reference document for academies when preparing your accounts for the 31st of August year end. So not far away now to year end. But this not just the accounts, but it also covers off the requirements of the trustees report and also the governance statements. And this is where the real changes are for trusts in 1920 year end. In terms of the format and content of the direction, the changes this year, James, have been pretty minimal. And obviously, where we are your auditors, if you're a client of Cooper Parry, we'll be picking up these on the accounts that they're prepared for year end to make sure they're in full compliance with the direction. Now, when the direction was first drafted, obviously COVID was around, but obviously just for timing and publication purposes, the ESFA have published the guidance on the direction, but also there's a lot of non-COVID stuff in there. So what the ESFA are doing is they're producing a separate bulletin which hasn't come out yet, which will update guidance certainly around COVID matters. And the few things that we just want to point out to everybody this morning that's going to come up in this guidance, we've had quite extensive consultation with the ESFA on this, so we know what's coming, but we don't know exactly what it looks like. So just to give you a quick heads up on these. So there's a document called PPN 220, which is a public policy note, which is a guidance around continuing to paying suppliers post-COVID. So again, there'll be some related disclosures which need to be published in your accounts later on in the year. There'll also be some recommendations around reporting on trustees' reports and governance statements about the impact of COVID-19. I kind of think these could be quite long in academies accounts going forward, and obviously what the impact on your particular trust is going to be. Also, I've got accounting treatments and disclosures around the government funding and what's being provided in terms of support due to COVID-19. More of that in a minute. So wait for that one. And changes in obviously regularity reporting and assurance requirements as a result of COVID-19. So again, once that update has been published, we will be issuing that obviously to our clients through the normal channel. So watch this space on that one. So, okay.
Fantastic. And I think Andy will be back to sort of cover that as part of sort of one of those bite-sized videos to deal with that in more detail. So thanks for that overview, Nick. Just before then, we dive into sort of the detail of the accounts direction. And obviously, you've mentioned that the bulletin. So let's just look at sort of the important part of that for trusts. And I'd just be really keen to understand what's going on with the exceptional cost funding and whether there are any issues for trusts to be aware of.
Yes, James, this is obviously of great interest to Academy Trusts. The guidance at the moment is that it has been produced, but there's a lot of uncertainties in it. So I think we have again asked the ESFA some further clarification, particularly around the claiming process and some clarifications around that. We haven't received that in detail yet, but again, this is our interpretation of things as they are today. So just a quick update really, and a reminder for everybody who wishes to put a claim in for exceptional funding. The deadline for that is the 21st of July. So it's only 12 days away. So if you haven't done your claim yet and you want to do one, I think everybody needs to crack on. Obviously wait for the end of the webinar because obviously you don't have anything interesting. But clearly that is a date that is quite important. So if you are eligible to claim funding going forward, but you do miss the 21st of July deadline, it's our understanding that a second claim window is going to be open at some point later in the year. So if you can't get the deadline in on the deadline date, you haven't missed the boat. And again, it's making sure that you actually keep an eye out for that further claim window that's opened. And again, the ESFA will be pushing out information around the second window later on in the year. One of the most important things is the eligibility requirements is around whether you're expecting to generate a surplus for this current financial year. And this is really where we've had most questions from clients and trusts. And the guidance says that if a trust is expecting or forecasting to generate a surplus in the year, so where you are now, what do you think you're going to generate? If you are going to generate a surplus and you are looking for exceptional support funding, you will not be eligible to claim the funding. So what does this mean? So from our understanding, what is meant by surplus? Clearly there's different lines of surplus within the financial statements for Academy. It's our understanding it's the operating surplus, which is the normal income and expenditure of the trust, which excludes any capital items of income expenditure, depreciation charges, or any LGPS pension adjustments that come as a result of the FRS 102 adjustment. So it's the normal day-to-day income expenditure of the trust. So in simple terms, if you're expecting to add to your reserves, meaning your reserves excluding those fixed asset reserves and your pension fund deficit in the year, you will not be eligible to claim the funding. So we further clarify, well, what do they mean by that? So ESFA said that it's the important point to note that about the in-year surplus rule. So the expectation is that the in-year surplus is after having incurred the exceptional COVID expenditure related to the costs that you've incurred to date, but before the impact of claiming for the funding for the exceptional costs. So it excludes the grant that you're going to get later on in the day. Does this make sense? It's quite complicated, this sort of stuff. So the key aspect of the expectations is that the COVID costs that you are bearing, where possible, should be met from existing resources. And that claims should only be made where this can't be achieved. And otherwise, this would mean you're creating a deficit position or you're drawing down on historic reserves. So the intention from the ESFA is that if that's the position, that's not what they're intending you to do. So if you are expecting, therefore, to generate an in-year deficit after allowing for exceptional costs, you will be able to claim the funding for exceptional costs incurred, but only up to the point of the amount of the deficit expected. So, by way of example, if you're expecting a deficit in a year of, say, £10,000, which includes a £15,000 exceptional cost that you've incurred and you want to reclaim, the cap will be on only that £10,000. So it's the amount of deficit rather than the amount of money that you spent on the costs. Clear as mud. The other area we also clarified with the ESFA is around the implications of claiming the funding on the basis that trusts would not be generating a surplus. So it's best guess at the moment. I think, you know, it's difficult. Most of your costs are in or known. So again, it's to what degree are you confident that the claims that you're putting in, whether it's going to generate a surplus or a deficit at the moment. So the basis of the trust expectation that would not generate a surplus, but then what happens if you actually do generate a surplus? So you get it wrong, you know, genuinely. So in these scenarios, I think our understanding the ESFA will not seek to reclaim the funding if it's a genuine mistake or there's an understanding or something's come through very much last minute. We understand that the ESFA will be undertaking some post-payment assurance. That's interesting. I think they call that bayoneting the wounded, don't they? I think so. In a number of areas, and this will likely include monitoring where claims have been made, but a surplus is subsequently reported. So again, I think the intention is what they're trying to do is make sure at the moment, when you're making the claims, this is your best guess estimate up to the point of claim. And if the estimates turn out to be slightly wrong and you do make a small surplus at the year end, they shouldn't be seeking to penalise the Academy for those particular timing differences or slight misunderstandings on definitions or the estimation process. It's only going to be a case where there is a large increase in reserves and the Academy cannot demonstrate that they've made a reasonable effort to estimate the estimated position before submitting a claim that they would likely to potentially claw back any funding. So I think our advice at the moment really is, if you've got any particular concerns about this, we're more than happy to have a conversation with clients just to run through some of the assumptions and scenarios, and we can give you our view about what is reasonable. So again, if you're unsure, just check in with us. So.
That's brilliant. And just at this point, I think we've had sort of 2 or 3 questions just from that alone. So I'm just going to bring Steve in just to set the scene on those, if that's okay.
Yeah, hi. So we have had quite a few questions in, and I'm not the expert on, so if I'm asking the same question twice, so you have to bear with me. But Mary has asked, is this by each school or the MAT?
I think our understanding it's on a school-by-school basis. So again, it's just making sure it's at school level rather than just the MAT or the trust overall at the moment.
Okay, so that's great. So I think that's the same as this question here from Keith, which is the exceptional COVID funding calculated by the reference to the financial position of the trust/MAT, or as a whole, is it calculated school by school? So I guess that's the same question, right?
Yeah,
School by school.
Absolutely.
Excellent. So I think we've got a couple of similar questions in just like that. So I'll just review these now, and then I'll get back to you with any different ones.
Fantastic. Thank you very much, Stephen. Hopefully that just clarifies the position there for everyone. So thanks for that, Nick. We've obviously just gone into that minefield of exceptional costs and the funding available there. So we're going to sort of nicely meander on for the time being. I think it's worth just from those questions and things that when further guidance is released, that this will all form part of one of our videos, because it is going to be such a hot topic going forward. But then if we dive into sort of the main sort of accounts direction, and in sort of your introduction, you mentioned sort of the changes really being at the front end of the accounts. So it'd be good just to really to develop on those key changes from the start of the accounts, if that's okay.
Okay, thanks, James. Yeah, so a lot of the changes really are definitional and affect individual academy trust groups depending upon their size. Now, under the Companies Act, there is something called a large company criteria. And again, if trusts and these trusts as a whole meet those criteria of a large company, they are required to disclose some additional things in their accounts this year. So what is a large company in terms of academy size? There's 3 tests, of which if any 2 of those 3 are breached in terms of quantum, for 2 consecutive years, they are deemed to be a large company. So what are they and how would they affect you? So 3 tests are gross annual income of more than £36 million per annum, which is quite a high benchmark for most academies and less large groups. Gross assets, i.e. total assets, of more than 18 million. This is quite a low benchmark for academies because obviously this includes where you account for your fixed assets and the schools on the balance sheet of 18 million. That can very quickly get breached. And thirdly, it's the number of employees, which is 250. So again, a lot of schools will have, if they're certainly mid-tier maths, they would have more than 250 employees. So if you breach any 2 of those 3, you're in as a large company. So if you require, you're over that threshold, there's two things that you need to disclose in the accounts for this year. So one is, and again, this is all front-end wordy stuff in terms of your trustees report, but you might need to think about some of the implications of this because it does need a little bit of thinking about what you need to do. So firstly, how the trustees regard to foster business relationships with suppliers, stakeholders and others, including the effect on the principal decisions taken during the year. So what does that mean for academies? I think it's important for you in this area to cover relationships such as key stakeholders such as pupils, parents, key funders and the wider community. So again, looking at wide reach that you have across your community and putting some narrative in your trustees report for that. Secondly, the requirement is to have how you're promoting the company with regard to specific matters set out in the Companies Act. For the techies of you, that's called Section 72, subsection 1. And for academies, that's essentially how trustees have promoted the success of the trust in achieving its charitable educational purposes. So there's quite a bit of disclosure already in statements for that, but again, there's a further requirement to just clarify a little bit in terms of the disclosures for that. If you're not a large company, but you have 250 employees or more, the trustees also need to include in their report how you've engaged with your employees and how you have regard to your employees' interests and the effect of that regard. So again, just 250, some more narrative around employee engagement. Again, a lot of schools are already doing that in their terms of their report, but again, there's an enhanced requirement to do that one. Now, quite a techie bit here. I suggest you just listen to this and think, wow, why are we going to do that and how are we going to report this information? So this is another edition. Again, large academy groups you need to report something called the streamlined energy and carbon reporting requirements. So essentially what you need to do is if your academy consumes more than 40,000 kilowatt hours of energy in the year, you need to report some disclosures about it. Now, how big is 40,000 kilowatts a year? Well, we've just done a quick bag packet calculation, and we reckon the average house consumes about 20,000 a year. So if you've got the size of a school of more than 2 houses, clearly your consumption has gone up at home over COVID lockdown, so your kilowatt energy may have rocketed up. Anyway, so anything more than a couple of sizes of houses, you need to make some disclosures. So what do you need to disclose? You need to disclose things like the amount of energy that you've used and the emissions, an emissions intensity ratio, which is interesting, the methodology that you've used to calculate that ratio, and the measures you're taking to improve it. So where you're going and what's your targets for it. And that's rather complicated. However, just to be good, the government has published some detailed guidance on what this looks like, and also the ESFA have published some good practice to assist you all and academies of how to do this, including a worked example, which is great. Now, ESFA have clarified this, that you should not need to engage specialist professionals to provide this information for your reporting requirements. So by that, I think they're kind of implying that the information doing the calculation should be relatively straightforward. Haha, maybe not. However, it may be quite onerous for some trusts, because what they need to do is collect all their energy efficiency usage across all schools in your trusts, which include gas, electricity, transport fuel usage, and this also includes not just transport for minibuses and other vehicles that the school uses, but also things like staff mileage when they're going out and about and get mileage reimbursements. So it's not as easy as it looks on this particular one. So if your trust is not a large energy user, now the disclosures are voluntary. So it's up to you. If you're less than 40,000 kilowatt hours, you don't have to disclose. But if you want to, it's entirely up to you. I kind of guess what people are going to do. It's up to you to decide what it is. So we've included some details on this in our Academies Roundup, which went out a couple of weeks ago. So again, if you haven't seen this already, have a look on our website, and again, we can point you in the direction of that later on. So that's it. So that's the accounts direction stuff.
Fantastic. And then there was just a couple of additional things, I think, just from the government statement and the accounting officer statement, which I think are fairly minor points. But is it all right just to touch on them to close this off?
Yeah, there's a couple of things, James. Nothing spellbinding in this. I think the main change is trustees are encouraged to state in the governance document that they've reviewed and taken account of the DfE's governance handbook and competency framework for governance. Now, again, these are mandatory documents for trusts to comply with, but it's always good practice so that trustees know about their existence, and if they are complying with them, it's quite an easy read across to disclose those in the financial statements if they haven't done so already.
Fantastic. And then Steve just got a couple more questions just around sort of the audit threshold figures. Steve, is it okay just to come in and ask those?
Yeah, sure. So we've just had Caroline just ask, could you just repeat the gross income figure? That's one question.
Gross income is more than 36 million per annum.
And I think then the other question was just around sort of the first year and breaching those thresholds.
Yeah, they need to have breached those for 2 consecutive years. So if they don't breach, if they're under in 1 year and over the next, they don't have to comply with the first year. But then when they do, it's weird because they have to do some comparatives around it. So again, we can clarify that in further guidance going forward.
And in the first year of operation, if they breach in year 1, it's my understanding that they would immediately then need to include those. Yeah, brilliant, fantastic. So that's a great sort of summary then on the sort of accounts direction changes, obviously all around the front end. Lots of sort of additional disclosures to make, especially for large trusts. So I think in terms of sort of our piece of advice for all our trusts this year is to start looking at those early. Typically, trustees' reports kind of gets left to the latter part of the audit process. But I think hopefully some of these things we can start to do now and collate the information. Obviously, we normally bring out a model trustees report that we send out to all of our clients just to aid and support writing of this. That will be coming out. It's just that until we've got that sort of that updated bulletin and any additional disclosures that we need around COVID-19, we've kind of just held that back. So our suggestion in the meantime is we can provide the 2019 trustees report to get all sort of the generic information that would have been there last year, because that's still there, none of that's gone away. and then as and when then these updates take place, we can sort of add that in and make sure that you've got that sort of well in advance. And obviously then just to reiterate really what Nick said around sort of those thresholds, and I think it's just really important then for those amounts especially, just to do that rough calculation of what's all in my buildings, my fixed assets, plus my cash balance, and where does that take me to in relation to 18 million, because that will obviously just be the thing that trips people up. So thanks very much for that, Nick. So let's then sort of switch over sort of documents then to the Academy's financial handbook. Clearly this is looking in the future as it applies from the 1st of September. So what sort of key points should trustees, CEOs, CFOs sort of all be aware of?
Okay, thank you, James. Yeah, so the handbook obviously is the rules for next financial year, but obviously keeping a weather eye on it. Now clearly the absolute musts in the handbook are the musts. So we've seen the number of musts increase from 1st of September this year from 97 to 103. So a little bit of must inflation going on there. So I don't recall the musts ever going down in any year, particularly, James. Can you? I don't know. I can't remember that ever going down. So why are the musts important? Because basically, if you breach a must, it's a breach of your funding agreement. So it's quite important that you understand what the musts are, both the professionals within the academy, but also the board and the trustees need to understand where you are in compliance with your musts. So, you know, at the very least, you need to be complying with all of them. And if you're not, you need to know why and put something right around it. So, a couple of things we're not going to go through this in a massive amount of detail at the moment, but there's a couple of things which I think the audit and finance committees clearly need to have a look at in some detail about some of the procedures going forward. And again, I suppose that the key message here is, why is this important? I think this is a great indicator of what the ESFA thinks is important. If they think it's important, academy schools need to think it's important as well, and make sure that you are actually completely all over this. I think so. And again, I think it's just trying to increase that sort of level of management and governance of schools on a continual basis. So, what are they? So from 1st of March next year, 2021, if we ever get there, members must not be employees, even if in an unpaid voluntary role. This whole area of members and trustees and directors is all quite complicated, but they've clarified now. Members, so these are, I suppose, the original startup individuals, must not be employees. If they are, obviously you need to address that. That's why there's a little bit of time leading to actually implement that change. Trustees must take ownership of the trust's financial sustainability and its ability to conclude as a going concern. Massive issue for this year and going forward, certainly where schools are going into deficit and trusts overall, massive issue of going concern. And this needs to take account of long-term, obviously, viability and a read across into those financial plans and 3-year budget forecast returns which go into ESFA. Trust must now appoint a clerk to the Board of Trustees, and again some guidance around handbook about who that should be and the sort of skills and qualifications that they need for that. Register of interest, again some tightening up in this area, must be kept up to date at all times, not just at one point in the year, which includes the version published on the trust website. So if there's a change or an update on the information on the register of interest, the website information must be updated again on a timely basis. Also, interesting one from 1st of September 2020, a little bit of tightening up about the employment status of 2 individuals in the trust. One is the accounting officer and one is the CFO. Now, again, this is to try and make things a lot clearer. They clearly want those 2 posts to be on payroll. So if both the CFO and accounting officer at the moment is not an employee of the trust, Going forward, you need to have prior approval from the ESFA. I think the general guidance is at all costs you should really try and get your CFO and an accounting officer on payroll. But if the arrangement is it isn't at the moment, and the intention is to continue that beyond the 1st of September, you need to get an application and approval into the ESFA to approve that going forward. A couple of things in terms of general controls and measures that trust needs to put in place going forward. And again, this is just making sure and clarifying some things which are good practice. They're now musts. Trust must maintain a fixed asset register. So gone are the days you can get away with saying we're still working on it and we're nearly there on it. You've got to have one, and it's got to be good, and it's got to be working. You must avoid using bank overdrafts across all of your bank accounts. Could be tricky one that going forward. Alcohol, the old alcohol question has reared its head again. Alcohol must not be purchased from a trust fund. The trust funds itself, although there is an exception for religious services. So there's a little bit of wriggle room there. So I think you have to play by the book on that one, definitely. A trust whistleblowing procedures must be published on your website. So 1, you need to have them, and 2, you need to publish them on your website. And your risk register must be reviewed by trustees at least annually. So again, there is a requirement to do that. And then a little bit of further guidance on the school resource management self-assessment tool. The SRM SAP must be submitted to the ESFA every year. And with this, the next submission date is March next year. So, and then the old one about disclosing employees at certain salary banding levels. Details of employees whose total benefits in the academic year exceed £100,000 must be published on the trust website. So no longer is it sufficient just to put it in the accounts, but it must be on the website as well. Again, this is in bandings of £10,000. And again, the usual rules in terms of what's included in that pay is included. So it's gross salary, benefits and termination payments need to come through. Again, this applies from the 1st of September 2020. So you need to get in place those provisions at the moment and get that up on your website. Some clarification around internal scrutiny work. So this is whether it's internal audit or the old RO type of work. This now covers if any work is undertaken by the trust, scrutiny must now include both financial and non-financial controls. And where this has been reviewed, all these recommendations and responses and opinions, these need to be included in the annual summary, which goes to the ESFA. And also a brief reminder, because of a change in ethical guidelines for accounting firms, we're not allowed to do both external and internal audit going forward. So again, there's some split of responsibilities there. So, and I think also, finally, I think the expectations of an audit committee or the equivalent of audit committee, because not all trusts are required to have an audit committee, have now been made clear. These include things like, stuff that they would already do, but again, codifying that in the handbook, looking at the external audit plan, reviewing the external audit report, looking at the annual report and accounts, and where you're assessing the effectiveness of external auditor for recommending for a replacement or obviously dismissal. So again, it's just bringing those things more up to speed in terms of the actual requirements. So that's it really. As I said earlier, we've summarised all this on our academies roundup, which has come out. Some good shorthand guidance there. Quite clear about things that you need to do. So again, if you haven't got a copy, we can make sure we signpost that.
So the most important question then, given all of those changes, is there any extension on the deadlines?
Well, lots of consultation, lots of rumours flying around. Are they going to extend the filing deadline of 31st December? We've been attending various academy forums for the firms. The answer is, at the moment, no. 31st of December is the date, but we don't know. But if we do know, we'll let you know. So I think business as usual, audit season is still on. 31st December, sign off and get them submitted accounts and all the other returns that need to go by the year end. So business as usual at the moment, but watch this space. Fingers crossed. Nothing too disruptive is going to happen over the autumn. So.
Fantastic. And I think, Steve, there's just a sort of a couple of questions just to sort of finish off this little bit.
Yeah, we've had a stack of questions, and we have been answering some people privately. So everybody who is watching, please, it'd be really great to let you know that we'll either answer privately if it's a quick one right now. We'll either answer live if we think it's if it's not too personal to you and it would be for everybody. And the other thing is to rest assured that we take every question that is asked, we create a really good Q&A document, and then we send it out to everybody so you can see your question answered as well. So I just want to reassure everyone that we are going to try and answer every question. So yeah, we have had one. It said, do you recommend us lifting all the musts and then presenting, commenting on each, e.g. met, not met, to present at the governor's meeting?
Yeah, I think that's a great idea. Certainly, where we're carrying out internal assurance review. One of the key aspects of what we do is making sure that all the musts are met in every financial year. So again, it's good practice to make sure, because otherwise, if you don't do that, you don't know whether you've met them all. And clearly, it's making sure that certainly the trustee and the board are seeing where you've met all those musts. And similarly, if there's any breaches or anything that needs clarification or approval by the ESFA, and again, just making sure that you have recognised all of those things during the financial year and you've received all the responses. So again, just making sure you've got it absolutely tied down.
Fantastic. And then was there an additional one there, Steve, on salaries?
Yeah, so reference salaries. This is from Doug Thorpe. Reference salaries must be on the website. If they are in the accounting statement, which is on the website, does this comply?
Unfortunately not, no. I think if you can't just refer to the fact that it's disclosed in the financial statements, there is a specific requirement to separately have it disclosed on your website. So similarly with the register of interest, again, that has to be a separate document. So
brilliant. Thanks. Thank you very much for that. And in terms of sort of our two-part webinar, that is sort of the conclusion then of sort of the legislative bit. So hopefully everyone can sort of breathe a huge sigh of relief or go and collate their electricity and gas bills, which I don't envy anyone that will have to do that, especially for sort of bigger trusts. So what we're going to do now is leave you in the capable of hands of Glenn Bott, and what Glenn is going to be able to do is just talk through sort of our process for the forthcoming year and how we're going to sort of get through our process with our client. But I think it's a great reference point for everybody that's on the webinar that your auditors should have something similar in place. We'll be putting backstops in place to ensure that it is possible to do the audit this year. But we're obviously much better than that, and Glenn is going to explain the reasons why. So over to you, Glenn.
Thank you very much, James. Right, good morning, everybody. First of all, a bit of an introduction of me. So my name's Glenn. I'm a director here in the specialist not-for-profit team at Cooper Parry. This year's a bit of a milestone year for me. The 31st of August 2020 year end will be the 10th year that I've been auditing academy trusts. So during that time, I've worked with a lot of academies, ranging from single primary schools up to large national multi-academy trusts and various shapes and sizes in between. So you can say I'm well versed. I've got a few battle scars from this, what is a very busy and challenging period, and one that I always look forward to, and one that I particularly enjoy. I mean, that busy period really starts from now, mid-July. I don't know where the year's gone. We've got to mid-July already, but runs from now up until that sort of final sigh of relief in mid-January time, when that final accounts return submitted to the ESFA. You can take a bit of a breather, before the academy season starts again. We're very fortunate here at Cooper Parry that we've got a very strong academy team. We've invested and added to it this year with Nick, myself, and Bhavesh, who you'll meet shortly, coming in. There's also an experienced team already there. And what we've done is drawn on those many years of experience of going through ways of working and audit approaches to come up with our current way of working, one that's tried and tested, ones that we've been through, we've experienced and has worked well, and taken the best of all of those approaches to come up with the approach that I'm going to give you a bit of a highlight run through today. I think it's fair to say the world has been a bit of a crazy place over the last 4 or 5 months. And I don't think anyone can be 100% sure what the autumn term is going to look like when your audits will be taking place. So you may be wondering what impact that's going to have on your audit. And the aim of this session is to provide you with that reassurance that whatever the autumn term looks like, we've got the tools, the processes available to still deliver that robust and effective audit and to be able to support you through that audit season. One of the key things we're going to be using this year is Microsoft Teams, which is an online tool. It enables us to communicate with you, enables us to transfer information, and enables us to keep both sides informed of the audit as it progresses. And some of you may already use Microsoft Teams within your schools. So if you do, you'll know what a great tool it is. Some of you may not have used it, but don't worry, it's very user-friendly. We'll be able to support you through that process. And we're also going to give you a demonstration of some of the key functions that we'll be using, which is what Bhavesh is going to do for us after my session here. So I'm going to give you a bit of a highlight, a bit of a whistle-stop through what the academy process is going to look like this year. So we think of our audit process as being a 3D process, the 3Ds being discovery, delivery, and then debrief. So going through them in order, the discovery phase is all about finding all about you, what you've been doing during the year, how you've been operating, how you're operating currently, how you think you'll be operating come the autumn term. So we can then tailor our audit to the audit risks in your organisation, but also tailor our approach so it fits in with you. I know some of you, the way you transfer the information to us, some of us, you have your own SharePoint sites that you give us access to. If that's the case, then great, we're happy to work with that. Some of you don't have anything, in which case we'll be using our team site. So we'll tailor our approach to you. We want to fit in with the way you're working already. The first stage of the discovery phase is the planning meeting. Given the current situation, we'll be holding these remotely. So the first thing we'll be using Microsoft Teams for is to have a remote planning meeting. Microsoft Teams is fantastic for this. It means we can have multiple attendees from multiple locations and we can all see each other. So although we won't all be in the same room, it will be very similar. And like we are, and we can have those face-to-face conversations that are really important for you to tell us all about what you've been doing, and for us to go through some of those technical points that Nick's just covered very well, and how they more specifically affect you and the things you need to be thinking about for your audit process. Those planning meetings are going on right now. Some of you I know have already heard from us and booked them in. Some of you have already had some this week. But if you haven't heard from us yet, don't worry, you'll hear from us very soon so we can get that audit process started. One of the key outputs from that planning meeting is to agree a timetable. We want to know from you when your board meetings are, so when you've got your audit committee or finance committee, when your full board are meeting, how soon before them you want documents to be circulated so they can read them before we come along to those meetings. So we'll be agreeing that timetable so that both sides know exactly where we are, know when the touch points need to be, and make sure that those deadlines, if it is the 31st of December, make sure that can still be met this year. One of the key data transfers is also using Teams. So there's an app within Teams called Planner, which we'll have a demonstration of later. But this enables a project management facility. Obviously, there's a lot of information that we need you to provide us for an audit. But the great thing about Teams is you can break it down into manageable segments. So gone are the days where you'd get a 5-page Word document listing out everything we want, or a multi-tabbed Excel spreadsheet. So this gives you a detailed view on screen, broken down into areas. So whether it's things that are to do with the trustees report, whether it's things to do with fixed assets or with debtors, you can go into it. And the great thing about Teams, you can allocate these sections to different individuals within your organization. So you can log in and see what tasks have been assigned to you, what you need to do. And it's very clear showing what information we need. you can check it off once you've delivered it, so you can see at any one point what's still outstanding and what we need. In terms of getting those deliverables out to you, we're currently finalising those lists now. They're almost there. We are waiting for this final update bulletin to see what we need around COVID and the disclosures and notes that are going for that, so we can get them all in one requested document. But it's going through pretty much all the aspects of the accounts. So financial information, we'll need your trial balance, we'll need nominal ledger printouts from your account systems. We'll need governance info, so things like your board minutes during the year, copies of any budgets and forecasts, lists of your members and your trustees, details of any changes, all the usual things that we'll be asking for, and anything new that's come out from the accounts direction this year. As James mentioned earlier, there has been some sizable changes, particularly to that trustees report part, especially if you're a large company. So we will be releasing a template with those deliverables so that you can see. It expands on the Coketown version of the trustees report that already gives you some detail about what needs to be included, but we provide some example wording and some more references to places you can look to get that information, just to really help you prepare that document and make sure that it is fully compliant with the new requirements. After that planning meeting and the deliverables have gone out, we finalise our audit planning internally. So that's where we develop our audit plan, we tailor our audit work to the audit risks that have been identified. But a key output from this stage that you will see is then our audit planning report. So this is a clear and concise summary which will list out all of the key topics from the audit. And this is a document that should be shared with your senior team, shared with all of the board, so they're aware of what the audit risks are and what work we're doing. Some of the key things included in this report, the audit objectives, so why are we doing an audit and what are we trying to achieve by doing that audit, what the key audit risks are for you as an organisation, and what work we're going to do to address those risks during the audit. Setting out that timetable, so confirming all those key milestones, key dates of meetings, key submission deadlines, so that everyone knows exactly what we're aiming for, and then contact details for your audit team, so that you can get in touch with anybody from our side that you need to during the audit. So after that planning stage, we get on to the delivery. This is the next D. So this is about doing the audit, making it happen, following that audit plan, ensuring also that you're kept informed of progress throughout the audit and any matters as they arise. So the first thing to mention is that we've got a great academy team here at Cooper Parry. So all of the team that will be working on your audits, they will all have experience of the academy sector. So this means they'll know what GAG funding is, they'll know who the ESFA are, they'll know what regularity and propriety means. Whether they can pronounce it or not is another matter, but they will know what it means, which is the most important thing. During that fieldwork, we'll be making use of Teams again. So this is for the two-way transfer of information. So where we're doing our testing and selecting samples, we will send them to you via Teams, and you can then respond with the invoices, with a copy of information that we need, and back through Teams as well. And another great feature of Teams is the communication functions. We can have video conferences at any time. You can either schedule them in or just have ad hoc calls immediately between various people. And there's also a live chat function as well. So you can drop messages to each other and have conversations through it. Just to clarify from your side, what information have we asked for? What do you need to provide? And then we can also follow up with any questions on the information that you do send over. So although we may not be able to be physically in the room with you, the communication channels are all there through Teams, so that we can make sure that your audit process is still effective. During that stage as well, there's also live manager reviews. So the managers and directors of the team will be reviewing the audit work as it goes along. So make sure it follows the audit plan that's been set up, but also to ensure that any matters that arise, any weaknesses or recommendations that we're identifying, we bring to your attention as early as possible, so that you can then respond to them. And just to ensure there's no misunderstanding on our side about how your processes and systems work. We think there's nothing worse than the on-site team, virtually on-site, the team doing the audit work, coming away, you thinking everything's gone absolutely fine, and then you get a findings report from us later on that's got lots of matters raised. We want to deliver a no surprises audit. We always find it's most efficient if we have those conversations as early as possible, so we can resolve them before they get to that back-end reporting stage. As part of that delivery, we'll produce, well, there's two key documents that come out of it, one being the draft financial statements, whether that's financial statements that you prepare yourselves or the ones that we prepare for you, and then also our draft audit findings report. So this findings report is in answer to that planning report. Again, it's a clear and concise document, focuses on the key matters from the audit. It will tell you, most importantly, the expected audit opinion in terms of your financial statements and regularity. So whether there's any qualifications that are needed in there. It will respond to those key audit risks, and also tell you about the work we've done and the conclusions we've drawn from that process. Give you details of any adjusted or unadjusted errors that we've identified during the audit, so any differences from those original figures we've been provided with. And then most importantly, if there's any recommendations that we have from the audit, so if you've got any control weaknesses or anything that could be done better, or things we think can be improved upon, we will put them in there along with our recommendations. As part of this stage, we'll have a completion meeting with you. Again, depending on what things are like, ideally face-to-face, but if not, we can do them remotely through Teams again. And it's basically talking through that document. So making sure you're happy and fully understand all of the findings that we've got in that report. If there's anything outstanding from the audit process at that stage, it gives that opportunity to resolve those matters and to make sure that we're still on course to meet those key deadlines, those board meetings and approval of the documents. So that's the discovery phase, the delivery phase. We'll then go on to debrief. So two parts of the debrief. One part is us debriefing to you, so telling you all about those audit findings, delivering those final documents, and then there's a part where you debrief to us as well. So firstly, us to you. So after that completion meeting, we'll go away and finalise our findings report. Then that gets sent out and circulates to the audit committee, to your finance committee, in advance of the meeting. And then the key stage for us is then attending that meeting. So that will either be your audit partner or your audit director, and they'll come along and present that audit findings report to the committee, to those who are ultimately charged with governance of your accounts. And we think that's really important to have that communication directly, that two-way communication, so we can tell you about the audit findings, but also the board can then question the audit partner, the audit director, about the audit work that's been done and can delve into any issues that have been brought up in that findings report. Make sure that they're happy with the findings that have come out of it and fully understand the impact of them on you as a trust. After that meeting, the documents are then finalised, they're prepared, ready for the final board meeting where they get signed off. And then once that's done, we will provide you with them in their final format, ready for you to upload to the ESFA, currently by the 31st of December. But as we say, if we hear any movement in that, then we will indeed let you know. The important thing to note is we don't rest on our laurels here at Cooper Parry. So we do actively request feedback from our clients, formally through client satisfaction surveys, but also informally, we will just ask you the question, how have you found the audit process this year? If there's something that we're doing that you absolutely love, please tell us and we'll carry on doing it. If there's something that you think we can do better or we can improve on, again, please tell us, because we want to continuously improve and make sure that we are working as well with you as we can and making sure it is efficient for both sides. So in summary, that's the 3D approach. So I hope that demonstrates how we'll work alongside you, gives you some reassurance about how during that audit period, we can still deliver that robust and effective audit that you need, but also support you throughout that process. Now, I've talked you through our 3D approach, but because this is a WOW webinar, we're going to supercharge it today. So for one day only, we're going to give you a 4th D, and it's going to become a 4D approach. So I've told you that we're using Microsoft Teams, but I'm now going to hand over to my colleague Bhavesh, who's going to give you a demonstration of some of that key functionality. So that if you haven't seen it before, you can see how user-friendly it is and how well it will work to help get your audit process this year. Over to you, Bhav.
Thank you, Glenn. Good morning, everyone. My name is Bhavesh Patel, and I'm a manager here at Cooper Parry. And part of my role is to ensure that your year-end audit is conducted in the most efficient and effective way possible. And as Glenn has mentioned, in order to do that, we shall be utilising Microsoft Teams. Now, some of you might have been using Teams already. It's a fantastic tool. It's a great way of collaborating with members of your own staff and people outside of your organisation. And its features provide a lot of sort of flexibility in terms of approach, which is one of the main reasons as to why we've decided to utilise it for our audit approach going forward. Now, if you haven't used Microsoft Teams, not to worry, it's quite a straightforward, very intuitive program. But if you want more of a guided ability, of how to use the system, you just Google Microsoft Teams, and then if I show you across to the site, Microsoft have set up a sort of training video site. So in order to learn how to use it, various different functions, they've set up these small little videos of its features where you'll be able to sort of click in, and there's a few videos to teach you sort of how to go about using the system. Now, the purpose of my session, as Glenn mentioned, isn't sort of to just go through these videos with you. It's actually to demonstrate how we'll be using it as part of your year-end audit process. So if I take you across, there's two different ways which you can access Microsoft Teams. There is an actual dedicated app which can be downloaded and installed on your machines, but the most useful feature is the fact that it can all be run through your web browser. Now, the benefit of that is that you don't need IT to then install a specific app or to have a specific user license or have to make any changes to your firewall. It's all running in my Google browser, and it will work on any browser. So in order to get registered, you'd be set up on a team and you'll receive an invite email. And within that email, there'll be a link for you to click, and then it will open up in your browser, very similar to what you see here. We can add members of the team. It doesn't have to be an organizational email. So as Glenn mentioned, running planning meeting or completion meetings with members of the trustees, if they don't have a school email address, it's not a problem. We can add their personal email address. They can see the same functionality here and use it for communication as well. Now, we set up a test academy here. It's not a real academy. We've just set it up for the purpose of today's presentation. So within here, one of the first facets of Microsoft Teams I want to cover is just the communication side. It's a very strong communication tool. As Glenn mentioned, there's instant messaging. So within each team, there is a channel. And with each channel, there is a chat functionality here where messages can be typed. Now, messages will appear here and will be visible to all members of the team. One feature I'd like to utilize is just the ability to at various different individuals. So when you use the at function, it'll pull up all members of the team. So I would then just select the person I want to send a message to. So if I just type in a quick message. So now that I've added Glenn and I send that message, he'll actually receive a personal alert on his Teams to say that he's had a message, and it's for him to then go in and be able to respond. If you don't add people, they won't get the alert. So if you want to get someone directly, that was the best way to do it. And in order to initiate various different functions, we can, thank you for responding, Glenn, we can click in the individual's tile that we want to connect. And you'll see from the address bar that you can either send them a separate chat, so that will take the conversation away from this general area within your teams, and then you can have a separate one-on-one basis chat with that individual should you wish to take that element of the conversation away from the group. You can also select the mail, so this will populate a blank email with Glenn's email address in, so you can send him a message and any attachment through traditional Outlook. You can also initiate a video call. Again, as Glenn had mentioned, you can do this on an individual basis, or you can set up a group video chat. And if you're feeling a bit camera shy, you can also conduct a regular traditional audio call. So very much like a phone conversation. Again, it all runs through the browser and the app, and it utilizes the microphone and speakers of your laptop. So that's what we'd like to see in terms of the use of the communication. And then, as Glenn said, we're going to use Microsoft Teams to sort of drive the information request process. So within Teams, you'll have different channels. Within one of your channels should be information request, and then there should be an audit deliverables tab. So this is built from Microsoft projects, and in order, rather than send a big blanket long list of bits that we needed, we've decided to break things up into various different buckets. So within each bucket, we've set up one for general information, balance sheet, SOFA, and also the accounts return. Now within each bucket, you have a task. Let's move this across. And then within each task, there is a checklist. So you'll see the checklist here. Move this away. So within each task, you'll have a checklist, and then you can also assign various different properties. So if we go into the fixed example, it'll tell you what bucket it sits in. You can also set the progress, in terms of how far you are in terms of completing it. And I would encourage you to utilize these functions also in terms of the priority as well, and the start date and due time, because that will help feed into the reporting process, so we can have a glance, which we'll look at shortly. So when you click in, you might find there'll be a message from us. So we can also type in messages and upload items. So what I've said here is that there is a schedule which we've had last year, which was very helpful. Do you have an updated for 2020? If you scroll to the bottom, you'll see the item. And again, it opens up within the application and you'll actually see the item that we've uploaded. So this is a good way of us interacting with yourselves and checking on the various different bits and pieces which we might need from yourself. So if we go back into the list, how do you go about sort of completing items? So what you can go, if you go into the debtors, for example, if you scroll down, you'll see that there's various different items that we'll need in the checklist. Now we're very flexible. If you feel that you've got a schedule or a folder of information that meets these requirements already, we're very flexible in adapting to what you've actually already provided, save you having to set it up again in a new template. However, if you don't have any templates and the year-end information process is new to yourself, let your audit team know at the planning meetings, and we can upload a number of templates within each section for you to then go through. So as you go through, you can sort of tick off the items and that will complete the items off. If you feel there's a particular item that needs to be separated out or answered by a separate member of the team, you can simply pop that item out and it'll appear at the top of the list. You can then reassign the item to a member of the team. You can send them a message to say, you know, this one's for you. I think you've got the backing information, and then that'll appear on the list. And when you're ready to upload your information, you simply go down, add an attachment on file. And again, you can add items individually. You can add in a zip folder, and that item will then be uploaded in the background to our secure SharePoint, but it's all there within the card. And when it's complete, you just simply change the progress to completed. Now, the benefit of the progress and the statuses is that it gives us a lot more added functionality than just a straightforward list would. So we can actually see at a glance items which haven't been started, items which are in progress, potentially items that are late, and they will appear here as well. So you can go into them and find out which bits are late, potentially change the due date if you feel there's a delay in information and we should expect it at a different time. And if you scroll down, as you assign things to different members of your teams, you can see potentially if there's a block in that flow of information from a particular individual or a particular section. So this is very powerful for us as auditors and for yourself as clients in terms of managing that process of information and ensuring that any delays are minimized and also any blocks of information are then sorted. Now, if you're an individual who's been tasked with items and you want to have a look at essentially all the items that potentially relate to you, you're not worried about anybody else's sections, you simply click on the chat function and then you'll see under my tasks all the items that pertain to yourself individually if it's been assigned or if you've been assigned with another individual. So again, if you want to go away and just sit down and focus on the parts which you are responsible of, the chat ability and the tasks, my task planner allows you to then go about uploading those items and responding to our requests. Now, some of the information which you will provide to us is going to be sensitive. It's not going to be available for everyone to look at, and that's predominantly around payroll. So if you have sensitive information like that, again, at the planning stage or any point before the audit, just let the audit team know and they can set up secure file areas so items that get uploaded can't be seen. So what I have done, if I switch to my my work Teams app, again, looking at the Test Academy, if I look at the information requested from the files, I can see a folder here called confidential payroll information. And within that, I can see a payroll summary containing information potentially of the senior leadership team or members of staff, and I'm able to access that as an auditor. But if I go back to my personal page and then click on the files, you'll see that you can't actually even see the folder, let alone the file. So there is a secure way for us to be able to share information and be able to get that delivered in a secure fashion. So I think that will be the main features of what we're looking to use. If you have any questions or queries, do let me know. And also, I'm looking forward to working with a number of you in this year's audit process. So thank you very much, and I believe I'm passing across to James.
Fantastic. Thank you very much, Bab. I think there's just unsharing your screen there with your Teams page. Thank you very much for that. I think the thing that I was most interested in there was certainly Eileen Milner and Theodore Agnew's salary costs, if only they were that small like the rest of us. And for those who know me, if worse comes to worse, we will use carrier pigeons, I think, because I'm very much a slate and chalk kind of guy. Anyway, thank you very much though to Glenn and for Babesh there, just really sort of going through sort of that in so much detail. But obviously the main point really to summarise there is just that we will work with you, and we will make sure that that process and the way that we use technology is the way that suits you, your organisation, and what's needed. So hopefully that then is sort of the end of our content. So we've obviously had Nick talking about and cutting through the jargon of the legislation. We've then had Ben and Babesh just talk around sort of the audit process, how it's still possible in these uncertain times, and obviously not knowing what sort of environment we will be in the autumn term. So I think now what would be great is just to get everybody onto screen, and I think there's sort of 3 or 4 questions that has been coming throughout that it'd be great just to sort of ask the panel, get their thoughts. Anything else, please drop it in the questions now, and then we were going to hope get you on with the rest of your day. So Steve, I think there was a question that referred to deficit and an ICT project and how that would affect the exceptional costs. Would it be possible just to elaborate who that was and what the question actually was?
Oh, see, now you're picking questions. I have to go and find them because there's so many. But you are right. I think that was from Alison. She's anticipating an in-year deficit drawing on reserves to undertake an ICT project. The pandemic measures made this deficit worse. Can we claim for this under exceptional costs? Nobody wants that.
I think, James, do you want to crack on with that?
So I think all that I'd say on that is I think we would look at that in isolation. And I think if we're able to get that planning meeting booked in sort of next week, we can certainly challenge that topic, because what we would just want to look at is around sort of the ICT costs, what's revenue and what is then sort of capital expenditure. And I think that then coupled with your costs for around COVID-19 will just determine then what sits as part of your operating deficit and what would then sit outside that. And we would help you along just in terms of making that claim really and ensuring that those numbers are right. Is there anything else that you wanted to add to that, Nick?
No, I think it's this definition of whether it's capital expenditure. I think that's the key thing.
Absolutely.
I wasn't quite sure was the ICT project because of COVID. I wasn't sure whether they had to do it because of that, or it went into deficit because of the capital expenditure or the revenue expenditure on the ICT. So
I think the inference was that the ICT project was before the pandemic.
Right. Okay.
Cool. That's brilliant. Thanks for that, Steve. And then there was another question then on internal scrutiny.
So internal scrutiny hasn't happened due to COVID. What do you recommend? And that's from Jose.
Okay, I think there's 2 things. One, was it planned to have something? And it's just been delayed. So if that's the case, obviously once the academy is in a position to start again on it, fine, get on with it and get it done. Does it? And again, depending on what the scope of that work is, you may need to test transactions if transaction testing is part of that work in the current financial year, But if there's nothing planned or nothing says carried out in the financial year, clearly there has to be a degree of scrutiny that goes on. That's the expectation from the handbook. So again, I think there could be a case for, because of lockdown or the particular procedures can't go in place. Again, I think there could be an exception that you don't have a thing. But again, in terms of your governance report, that needs to be disclosed in there. We found that we've carried on with quite a number of clients where we carry out the internal scrutiny, that we've been able to continue in that work. So I think it's kind of difficult to say, well, we're shut or we couldn't let anybody in the door, because it's happening all over the place. But there will be certain local exceptions that need to be taken account of. Really.
Great. Thank you very much, then, Nick. And then going way back to our sort of favourite topic of the day, around sort of the energy disclosure. I think, Steve, there is a question on that, just to clarify that.
Yes, there is. It's from Mary. She's asked, is the energy disclosure based on large company criteria or the 40,000 kilowatts?
I'm not going to answer that because I don't know. I believe it's tagged to the large company provisions, primarily. So if you're a large company, you need to report it. But again, there's the 40,000 threshold as well. So I think it's both criteria need to be met. So you have to be a large company and over the 40,000. Is that correct?
Okay. Yes, yeah, that's correct. And then if you're small, so under the threshold of 36 million income, 18 million of total assets and 250 employees, the disclosure is not needed whatsoever. So if you're large and you breach those over sort of the last 2 years, and then you have the 40,000 watts, that's then when the disclosure needs to be included in the trustees report. So still clear as mud, but hopefully we've done our best to clarify that further for you. And I think we are sort of at the end of our time. There are no more questions to be asked.
James, yeah. So I'm just going to start throwing stuff at you now that I've not been able to run past you. So
fantastic.
Just to make Bav feel really good, one comment was, "Wow, this team demo looks amazing." So I think it was just the way you were doing it that was amazing. I think that's what that was.
Thank you.
You were going to ask about sensitive information, but you covered that. She said that you had covered that, so that's great. We're getting a lot of questions in about will we be recording this and sending this out. So just to confirm to everybody, we will definitely be recording this. I'll be tidying it up to get rid of some of the extra bits that we don't need. And I'll be sending that out to everybody who attended and didn't attend. And also all of the questions will be going to you guys as a team, and you'll be quickly turning around all the answers in written form, and then we'll be sending that out in a really nice document to everyone. So we've been having lots of questions about those. So back to proper questions. I believe that we meet criteria of large company, but only formed MAT within the last year. So can I ignore it for now?
No.
If you're a new MAT and you go straight away into meeting those large company criteria, then unfortunately you have to apply all of the regulations from day one. And the 2-year grace is if you're currently below the thresholds, but you go over it 1 year, they then give you that 1 year grace before the second year. And that's in case there's someone that's perhaps breached it for 1 year and then next year they may be back under the thresholds, so they don't have to keep changing how they report, which is why you get it. But no, if you're a new MAT, breach those ones in the first period, then yes, you are required to comply with them all.
Okay, well, they followed that up, not she, they followed it up. Jamie's followed up with, "Oh great, I want to cry." So next question from Mary is, with the team's audit function, would there be an expectation that each school in a MAT would complete this?
Well, we're quite flexible. So if you feel that you wanted a separate channel for each school, we can have that sorted out for you. So then within those channels, we'd set it up so only members of those particular schools can be added in. Or if you want it all within one, we can just have the one channel where all the information then gets uploaded against. It's purely flexible in terms of how you would like to approach it.
Okay, great. Glenn, I think this is a question for you. This came in during your section. This is from from Mary. Does that mean that someone will actually visit in person to feed back to the governors?
It's a great question, and one I wish I knew the answer to. If we are able to, and there's, depending on what the requirements are around social distance and everything else, I mean, my personal preference is always to be there in the room, face to face with the board, to discuss the findings and to have that conversation. So if we can, yes, we definitely will be. If we can't, then we will do them remotely, as we have been doing. But yes, hopefully yes. But who knows what's going to like? We're another 4 months from then, so we shall see. But hopefully yes. If we can, we will.
I think the expectations is that at the moment we are feeding back and attending audit committees by Teams and Zoom and whatever other means that those individual clients want. So we'll be guided by our discussions with you during the planning meetings, and clearly that won't become clear a little bit later in the autumn. And again, we have some of our own rules as a firm in terms of allowing people into client office space or premises. So again, and this will apply to the on-site, if any of the on-site teams happen in terms of physical presence, boots on the ground within the schools, we will be asking clients to give us some assurance about the sort of COVID secureness of their sites. But again, that'll all come out in the discussion. But no, we need to be flexible. If people find it easier, I think a lot of boards and trustee bodies have had lots of discussions and calls over the airways now. Find them a lot easier, quicker in some circumstances, get through the business a lot quicker. But again, we'll be guided by what the clients want. And again, I'm like Glenn. I like to sit in the room and have a good chat and have a cup of tea and have a look around. Really, if we're ever allowed to get out of the house again. So.
That's fantastic. We've got a couple of more questions. That's it. Penny has asked, is it historical salaries of 100k plus or current academic year contract? So that goes back to when we were talking about the salaries on the website, wasn't it?
Yeah, so this is from sort of the first from the Academy's financial handbook, so it applies from the 1st of September 2020. So it will be next year that we put those in, and that first reporting period, so the year 2021, we will put the comparatives for 18-19. So although that will be in the financial statements only this year, we will take them out and put them into that reporting document next year when it's required for the website.
Really good. Okay, well, we have one question left, and it's a kind of a personal one, but I think it highlights nicely where we keep all our information if people need it. So Jamie has asked, will you have summarized all of this in an easy document that they can share with their finance and audit committee? And they meet on Monday. So I don't know if we're able to help them.
Yeah, I mean that should be possible. And what we will make sure that we do is part of the Q&A sheet that we'll put together following our webinar is we will put the links on the website that reference sort of the Academy roundup. So it will have sort of the written details of the accounts direction changes and the Academy's financial handbook changes, and we will also put a note in there around sort of our articles on remote auditing and just how, as a firm, that we're making that happen, just so that, again, just to add to that reassurance of what we're doing and that it is sort of firm-wide. And then just, I think there's one more just come in, Steve.
Yeah, we just had one more. Jamie did just reply as well, saying no pressure. But they don't understand pressure. If they'd understood the technical issues we had 1 minute before going live today, they would know the pressure very well. So yeah, one more one from Jose is asking the salary cost. Does this include NI and pension or just salary?
I believe from the guide, it's inclusive of everything.
In that case, then the question decks are clear.
That's fantastic. Well, thank you all very much for attending today's webinar, and thank you very much to Nick, Glenn, and Bav for helping put this together for us. I'd hope that you've taken out as much as we possibly can, and in terms of our 3 objectives, we've met all of those for you. So you feel suitably jargon busted with the legislation, and that is as a lighter clear of mud, certainly on some of those points there. And you've got that complete clarity on our process and the way that we're really able to use the technology to maximise how we can be as agile and as flexible as possible come next term, come whatever's thrown at us, to be able to deliver that audit to the same standard that you've always had. And then lastly in terms of all the questions that have come along, and there's been plenty and there've been great questions, that we've been able to answer those as fully as possible, and that you feel that you're suitably supported going into that summer break. And hopefully we'll look out for all of our videos that will be sort of coming along, because we've basically taken the plethora of the great and the good of not-for-profit and forced them into a darkened room to give their sort of 10-minute slots. So you'll at least get to know all of us by the end of the summer. And yeah, look forward to seeing you all with the planning meetings and into next year with the audit process. So thank you very much all.
Thanks all. Thank you, Jack.
Thank you, everyone. Yep.